My guest today is Nick Neuman. Nick is the CEO and founder of Casa, a well-known provider of various Bitcoin services, specifically, I think, Bitcoin security services. So, really excited to talk to Nick. He is a very keen and passionate Bitcoiner, I think we'll find. Hey, Nick, welcome to the show.
Hey Andy, thanks for having me. I'm excited to chat for a little bit.
I'm excited to chat for a little bit as well, Nick. So let's begin at the beginning, as we always do. Love to just hear a little bit about your personal background, and I suppose your early days as a Bitcoiner. How did it all begin for you?
Yeah, well, um, the part that I really remember started in early 2017. That was when I really started paying attention to Bitcoin. However, as a friend of mine recently reminded me, I knew about Bitcoin much before that. He sent me a screenshot of a text message where he had sent me some questions about Bitcoin because I was in finance at the time, and I said something about it being a scam. That was about 2014. So really kicking myself on that one, I gotta say. But yeah, I really started getting interested in Bitcoin at very early 2017, right as I think the price was around 3,000. So, it was like January, February. And then that year it just went crazy. And so that was really when I started getting involved in the ecosystem and paying attention. And my career background was in finance before that. And so I worked in investment banking and private equity, and eventually just honestly got sick of making presentations for somebody else to make a decision. And so I decided to move into the startup world and was working in travel tech for a little while, fell down the Bitcoin rabbit hole, and knew that I needed to get involved in Bitcoin as my full time job. So, um, really, the reason that we started Casa was we were looking at the broader ecosystem and looking at the fact that one of the core technologies underpinning Bitcoin, a foundational building block of Bitcoin, is the private key. Yet, private keys were incredibly difficult to use. They were things where if you lose this seed phrase, you've suddenly lost all of your money. And for us, that caused a lot of anxiety. And so we figured there's probably a lot of anxiety here for other people too. And so we really started Casa as a, a way to manage and store private keys that is simple, that's safe, and that removes a lot of that anxiety that people have so that they can take advantage of that ability to be their own bank and to access a permissionless financial system through holding their own keys. And they can do so in a way that feels comfortable.
Yeah, that's well said, Nick. And I suppose this is really the theme of today's show Bitcoin and the ability for people to be their own bank and um, secure their own Bitcoin in a self custodial way, which is really always I think the promise and potential and the intention of Bitcoin from the early days. But Nick,
Yeah.
you'll be more aware than most, and you'll have more opinions on this than most. That is not really the case at the moment, is it? I mean, what do you think? I don't know if you can put numbers on it, but how many people do you think are self custody have their own Bitcoin in a self
Yeah.
custodial solution versus holding it on an exchange or something? Do you think?
Yeah. It's a very difficult question because of the way that Bitcoin works, it's really hard to know, you know, how many people are on the network using it. But there's a few different things that you can do to kind of triangulate this overall. And so, one really interesting thing that you can do is look at it less from a perspective of how many people are holding their own keys versus keeping it Bitcoin on an exchange, and look at it from the perspective of how much of the total Bitcoin supply is held by custodians and exchanges versus held in individual personal wallets. And this actually tells kind of a scary story because um, Chainalysis put out a report in 2019 that estimated that up to 60% of all Bitcoin is held by custodians and on exchanges. And then when you go and look at something like Coinbase's public filings, you can actually triangulate how much Bitcoin they have based on what they report. And Coinbase today holds anywhere between like 12 to 14% of all Bitcoin that hasn't been lost. And so when you talk about one institution holding over 2 million Bitcoin, that's pretty crazy. And to us, it represents a real risk to the network. It represents a major honeypot for attackers. It represents a potential entry point to any sort of seizure or freezing of assets by governments or anybody who has that level of authority. And so that's something that is really against the philosophy of Bitcoin. The very first sentence of the Bitcoin white paper talks about sending money between two peers without going through a financial institution. And so a lot of people think about Bitcoin as from the perspective of the inflation resistance. There's only 21 million Bitcoin. That's very easy narrative to get across for people. But what people forget about is this entire other benefit of Bitcoin, which is about being your own bank and having open permissionless access to a global financial network. And if we end up in a situation where everybody just holds their own keys, everybody holds their Bitcoin on Coinbase or Kraken or name your exchange and doesn't hold their own keys, we've rebuilt the old system on top of the new and really given up a major benefit of Bitcoin and really one of the core reasons why it was invented.
Yes, indeed. That's really well said, Nick. And look, we'll talk much more soon about the potential solutions that you and your team at Casa offer. And look, I don't necessarily want to pick on Kraken or Coinbase here because you have to kind of give them the benefit of the doubt to some extent, and think that these exchanges are run by crypto native leaders, crypto native teams who, by and large, have the best interests of crypto users, and they do a lot to kind of cheerlead for the industry, if you like. They're in the trenches and they do all that hard work. But at the same time, I saw there was some really kind of gritty wording in an updated policy put out by Coinbase last week, and Brian Armstrong came out. He explained it away in a kind of the way that you would expect him to. But do you want to just kind of explain what is going on there? And again, we're not picking on Coinbase, but just using it as an illustration of this kind of potential attack vector or weakness in the system, right?
Yeah. So Coinbase, in part of its public filings, every U.S. public company has to have risks disclosed in their filings. And they added a new risk in their latest quarterly filing, which said that in the event of bankruptcy, it's possible that their customers' funds could be considered available to pay out to creditors, so people who have lent Coinbase money. And so in a bankruptcy, when you're restructuring the company, the creditors, the people who have loaned money to the company, are the first in line to get paid out from the company's assets. And you would think that in this situation, the customer's assets are not included as part of the company's assets. But Coinbase, the risk disclosure that they made said this actually could be deemed by a court to be part of our assets that will get paid out to creditors. And so then what that means is that if Coinbase goes out of business, it's not a sure thing that you're going to get your assets back. And what's the chance that Coinbase goes out of business? I'm not going to sit here and say that they're going out of business tomorrow, right? But I think what's actually more problematic is that this could potentially, and likely does, if it apply to many more exchanges across the industry. And so if the courts will treat Coinbase's assets this way, what about your kind of small sketchy exchange that you're using to access whatever altcoin you're trying to trade today, right? And so that's where I think there's a lot more concern from my perspective around people being unaware and actually losing their funds in something that isn't even a security breach. It's just the business being mismanaged. And when you look at this, has happened over in slightly different ways over the course of Bitcoin's history. So Mt. Gox, when they went out, got hacked and went out of business, there was some Bitcoin left that is due to the users of Mt. Gox. But 8 years later, they're still waiting for that to go through the court process. And in the meantime, they're not getting paid back the original Bitcoin that they owned. They're getting paid back the dollar value of their Bitcoin at that time. And so they've missed out on huge price appreciation from the Bitcoin perspective. Then you look at an exchange like Quadriga CX, which was a Canadian exchange, and that exchange went out of business because the founder was committing fraud and trading against his own customers. And then he disappeared and is believed to be dead. Well, all of the funds that people had on that exchange gone. And so when you look at this, I think it's a problem that a lot of people don't understand the risk fully. And it's because they're used to this traditional legacy banking model where your transactions are reversible. You don't have to worry about, somebody getting access to your account or your credit card and stealing all your money. The bank can put that back. Governments are insuring banks. That's just not the case in the Bitcoin world. And so it's much safer for people to be holding their own keys in this new world of open permissionless finance.
Yeah, and look, I don't want to dwell on this, but the other problem, I suppose, with too many people trusting exchanges to look after their Bitcoin is, it's a narrative that I'm seeing more and more at the moment. Is this kind of risk of exchanges running, I suppose, what you call fractional reserve banking,
Yeah.
and you never really know what they're doing with everyone's Bitcoin, and there's nothing necessarily to stop them from selling more Bitcoin to people than they actually have. Right, Nick?
Yeah, I think that's a real risk. And it's probably less of a risk with somebody like Coinbase who has
Yeah.
to account for this stuff in a very public way. But for some of the more private exchanges that, you don't have a view into what they're doing on their books, there's some real risk around what they are doing with those assets. And maybe the exchange has decided, hey, we've got all these assets just sitting here doing nothing. Why don't we go lend them out in order to earn some return for ourselves on it? Well, in that scenario, they're taking risk with your assets without you even knowing it. And there's no way to really prove that they're doing this unless an exchange were to blow up and it were to come to light. But that's the point is don't trust, verify, right? And so the fact that you cannot verify that and you can't verify what your Bitcoin is doing with that exchange because you don't have the keys, that in itself is taking a risk. And I think you look at even some of the companies where people are giving them their Bitcoin in order to earn yield and explicitly knowing that, hey, this company is doing something with my Bitcoin to generate that yield. I think you have to be careful with what types of companies you trust with that. And usually, the higher the yield they're offering, the more risk they are taking with your assets. And some people just don't understand that. And they just think, hey, I'm getting a free 6% a year on my Bitcoin or whatever. And it turns out, well, to do that, they were putting all your Bitcoin into Terra over there, and Terra just totally blew up, and now your Bitcoin's gone. Now, hopefully that didn't actually happen to anybody. I think that there's maybe some questions around that still getting unraveled, but it's people just need to understand the risks they take. And I think in our current ecosystem, we don't do as good of a job as we should about explaining those risks.
Yeah, very much agree, Nick. And of course, one of the reasons, though, one of the reasons why so many people decide not to self custody their own Bitcoin is because they see it as it's a risk in itself, which of course is true, right? Because part of being your own bank is you really do have to be self-sovereign and take responsibility for securing your Bitcoin in a
Yep,
way that is secure. But the reality is, there's human error comes into the equation, and we all know
totally.
how many, 2 million, 3 million Bitcoin lost, whatever it is, for the simple reason that this stuff is hard. So if that's, I guess, the context, I'm setting it up for you, Nick, to explain how Casa attempts to solve this and make it possible for people to secure their Bitcoin in a way that is, hopefully a little bit more safe and secure and recoverable, even if that makes sense.
Yeah. So you're right. This is a difficult problem. This is why we have even potentially up to 4 million Bitcoin lost forever. And this is the problem that we saw when we went to create Casa, which is unless people figure out or are given the tools to hold their own keys in a very easy and safe way, this technology is not going to reach its full potential. And so what we've done at Casa is make it as simple as possible to hold your own keys without having to worry about losing them or theft or any other of these sort of like existential risks to your Bitcoin, like natural disasters, fires, floods, that kind of thing. So what we've done is we offer different levels of security in the app based on how much Bitcoin you actually need to protect. So let's say you're really new to Bitcoin and you've got, like a few $100s to a couple $1,000s worth of Bitcoin, and you just need a really simple place to hold that. We've got a very simple mobile wallet on our phone where it sits on the key is on your phone and it's in the Casa mobile app, it sits in your phone's secure enclave. And if you happen to lose your phone, we actually encrypt that key and back it up to iCloud or Google Drive, so that all you need to do is get a new phone, log into your Casa account, log into your iCloud or Google Drive, and we'll pull it down and give you that key back. And it just works like magic. It's like having a Coinbase account, but it's for people who want to hold their own keys. And the great thing about that is here's the difference between this and using Coinbase. When you log in to your exchange account, you don't actually hold the keys. And so whoever has the account username and password can actually log in and request funds to be moved by the exchange. And there's really no way for the exchange to prove that you are who you say you are aside from those authentication credentials. Which means that somebody else, across the world could log into your exchange account and steal your funds. And since transactions are irreversible, you have no recourse. Now, when you're holding your own key with Casa, as an example, let's say somebody gets your username and password for your Casa account and logs in. They still don't have access to that key because the key is on your specific device. And so that protects you against that kind of external hacking vector. But at the same time, we don't make you do all the things that a lot of wallets do, which is write down this 24-word seed phrase and store it somewhere. It's just, people don't want to deal with that and they don't know how to store it securely. And so we really try to remove that element from our product. So that's just the simplest way to get started with Casa. But then you start to go into our higher security tiers. And this is where the magic really comes in for people who are storing anywhere from, 5,000 plus all the way up to millions of dollars in Bitcoin. we protect your funds with multiple keys. So most wallets, you've got one private key. And if you lose that key, you're just SOL. You've lost all your money. Well, with Casa, you can have multiple keys protecting one pool of Bitcoin. And so that means you can lose a key and not lose access to all of your funds. It basically allows people to be human again. It brings back that human ability to make a mistake and still have access to your money. And this is super important because this is the key switch that reduces anxiety for people, because everybody knows inherently that they aren't perfect. They can't be perfect forever. And so when you know that you have room to make a mistake and not have that be catastrophic, that is really important. And so as an example, at kind of our middle tier, you have 3 total keys and you need 2 of them to actually access and spend your Bitcoin. So you've got 1 key on your phone, 1 key on a hardware wallet like a ledger or a cold card, and then 1 key held by Casa. So anybody who's using a hardware wallet today to store their funds, this is a no-brainer for them, because you have the same number of devices, but triple the security. Because let's say you're using Casa with your ledger that you've already been using forever, and you lose your ledger. In a normal scenario, you would need to make sure you had that seed phrase to recover, or you're screwed. With Casa, you've still got a key on your phone and the key that's held by Casa for you. And so in that scenario, all you need to do is replace that ledger, and then we walk you through the process of transferring funds to the fully healthy 3 set of keys again, using that key that was on your phone and the key held by Casa to actually approve the transaction.
Yeah, nicely said, Nick. And so you've talked about two tiers there, and I understand that you have even higher tiers that offer even additional security, and I suppose with that comes a white glove Casa service, perhaps. So talk us through how that works.
Yeah, so at the highest level of security that we have, it's a 3 of 5, which means you've got 5 keys and you need 3 of them to spend. And so the benefit here is that at that 2 of 3 level, you can lose 1 key and still have access to your Bitcoin. But if you lose 2 keys at the same time, you're back to being SOL. At that higher level, since you've got 5 keys and you only need 3 of them to spend, it means you can actually lose 2 keys at the same time and still have access to those funds. And this just provides a significantly increased level of redundancy and security for people. And so what people will do is they'll actually distribute their keys to different geographic locations. So you'll have 1 key on your phone, you'll have a key on a hardware wallet at home, a key on a hardware wallet at your office, and a key on a hardware wallet at a safety deposit box, and then 1 key held by Casa. And that helps protect against a whole range of things. So let's say somebody shows up at your house and says, give me all your Bitcoin. You can legitimately say, I cannot do that. You have to actually kidnap me and take me to the bank. And then I have to walk into the bank and sign a transaction from within the bank vault. And so that significantly increases the bar for potential theft. It significantly increases your protection against natural disaster. If your house burns down and you have a hardware wallet in it, you don't lose all your money because you've also got your hardware wallets that are put in other locations. And so this is really meant for people that are storing medium to large amounts of Bitcoin, who need to think about some of these other threats, because this is life-changing amounts of wealth for them. And so they need this extra protection. And when people hear me talk about this, they may be saying, whoa, you're talking about 5 keys. That sounds kind of complicated. I'm coming off of Coinbase for the first time ever, and I've never even held my own keys. And suddenly you're telling me you're going to give me 5? And we realized that, and that's why we built this whole white glove service side of things. So we have the best service team in Bitcoin, where you are from the second you sign up, we're reaching out to you and sending you the hardware wallets that you need. We're booking calls with you so that you're getting on the phone with our team, and we're walking you through setup. We're helping you think about your security setup and making sure that the places that you're distributing your keys to are safe and they're geographically distributed and they have the security checks that you need to keep those keys secure. Anytime you have an emergency where you're worried about somebody, potentially accessing your account, you can hit a button in the app that is an emergency lockdown, which locks down your account and then sends us a notification. And then we can reach out and say, hey, is everything okay? So that team is really like having a private banker for your Bitcoin. And it's for the people that need a little assistance with their setup. They understand the security benefits of holding their own keys, but just want some help with making sure they do that right. And our team has been doing this since we started the company in early 2018. And so they're one of the most experienced teams in the industry at this, and have really helped a lot of our clients move from using a custodian like an exchange to self-custody in their Bitcoin and holding their own keys.
Fantastically said, Nick. Then, I'd be curious then, anything you can share in terms of, your, I suppose, user metrics or growth metrics, the kind of the trajectory of user growth that you're seeing at Casa. And I understand you have raised a Series A, 21 million. I'm sure there's an in-joke there. 21 million is a nice round number.
Yep.
So yeah, talk to us about the raise and the user trajectory.
Yeah. So over the last few years, we've really seen the business grow, and we tripled the size of the business last year in 2021, and so it's just been growing incredibly fast as people learn why they should be holding their own keys, realize that Casa is the solution to do that as a private key manager, and turn to us for help with that. We secure billions of dollars worth of Bitcoin. We're one of the largest security providers in the industry. And so that was really the foundation on which we went out and raised this new round. And so we raised this round of funding to help continue our growth and continue our mission of bringing private keys to as many people as possible in the world. And one of the things that we announced along with the fundraise was our new API product. So as we were looking at the industry, we were realizing that there's a lot of people who are starting to want to build on top of Bitcoin, and they're financial advisors, or they are financial services companies, or maybe they're even just building a game on top of Bitcoin. And they were running into this difficulty where they didn't want to take custody of anybody's Bitcoin. But in order to do anything with Bitcoin, you need some level of access to the asset to know what somebody's balance is, or to send funds to their wallet. And so the only options they had to solve this problem and to build their product without having to build the whole security side of things was to turn to a custodian. So they could go to BitGo, or they could go to Gemini and use their product, their API, to allow or to tie in the whole security and custodial side of things. There's no company out there today that is offering this for a self-custody solution. And that just seemed like a big hole to us, because as we want this industry to continue growing and to have more and more people building on top of Bitcoin, we can't expect everybody to want to build the actual custody side of things. And so giving people the opportunity to tie into self-custody that somebody else has built and that has been rock solid for 5 years in terms of security is a huge benefit to the industry, because now suddenly people don't have to move their funds to Gemini just so their financial advisor can see their portfolio and help advise them on it. They can, authenticate their Casa account with the financial advisor software. And then it can make a simple API call to say, what's this person's balance in Bitcoin? And so now their advisor can actually help them with that. Or maybe somebody's trying to get a loan on their house, a loan to buy a house. And as part of that, their whole net worth is being evaluated, and they want to include their Bitcoin as part of their net worth because it's a significant portion of it, but they don't want to sell their Bitcoin. Well, typically in the past, mortgage lenders haven't really counted Bitcoin or any other cryptocurrency as an asset when they're looking at somebody's net worth to decide how big of a loan they can offer them. Well, there's a new company called Hoseki that is building out tools to provide this in a more user-friendly way to banks and other lenders. And they're tying into the Casa API to show somebody's Casa balance to their lender in a provable way that is trustworthy and has the Casa stamp of approval on it, which just wasn't possible before in self-custody. And so we really expect that as we develop the API product more, we can help build a broader ecosystem around private keys and around self-custody, and not end up in a world where everybody is forced to build on top of custodians because that's the only option.
Yeah, very nice, Nick. And look, as we finish off this part of the podcast, then, interesting to hear those thoughts about, Bitcoin starting to be used as collateral to get house loans and that kind of thing. Be interested in your thoughts then. And how you see, I suppose, the progression of Bitcoin as more people begin to acquire some Bitcoin and adopt the network. Especially given the context of we seem to be in a bear market again here in crypto. So, we expect a downturn, and, that's fine. We always go through these cycles, and companies such as yourself, it sounds like you were born in that bear market of 2018. So, what
Yep.
takes to build through the bear market. How would you characterize, I guess, the pace and scale of Bitcoin's adoption? Where are we?
I think everybody says this, but we are still early, but it has been amazing to see the difference between the 2017 bull run and the 2021 bull run, or really 2020 to 2021. And just the amount of players in the ecosystem and the change in the types of people that are talking about Bitcoin, accepting Bitcoin, building on top of Bitcoin, investing in Bitcoin, it's grown substantially to the point where, I think 5 years ago, there was a question, is Bitcoin going to make it? And today, that's not even a question in my mind. Like, Bitcoin will continue to be a thing and will continue to grow. I'm 100% certain of that, just given the development that we've seen in the industry over the last couple of years. And so while we are early, I think it's been de-risked significantly from at basically any other point in Bitcoin's life. It's crossed to this threshold where it's significantly less risky to invest in Bitcoin. And so next, where I see things going is, Bitcoin starts to get used more and more, not just as this investment digital gold asset, but as a form of money where people are using Bitcoin for payments, or maybe they're sending payments over the Bitcoin network, maybe not in the native Bitcoin asset, but they're actually using the Lightning Network to send dollars, which benefits Bitcoin in the end because it's being transferred over the Bitcoin network. And so I think we will see more and more Bitcoin being used as a money transfer and settlement layer that the entire world can access. And that's exciting, right? Like once that starts happening more and more, Bitcoin becomes more and more of a form of money rather than just a form of digital gold that's there to protect against inflation. And so that I think is the next decade of Bitcoin. Maybe the first decade of Bitcoin was about it turning into this strong form of collateral and inflation protection. The next decade is the decade of usage and of building things on top of Bitcoin, of using Bitcoin as money, of utilizing it in the financial system as collateral. I think that's going to be really exciting to see. And it ties into Casa's core strategy, which is the more you need to interact with the Bitcoin network and use Bitcoin in the wider financial system, the more important it is to hold your own keys, because that gives you that permissionless access to do whatever you want or need to with your Bitcoin. And so that's why we believe we will see this shift of people from that 60% of Bitcoin held on exchanges to really a flip into more and more people self-custodying, and eventually the vast majority of people holding their own keys.
Awesome. Very well said, Nick. I enjoyed that. Thank you for that. I think it's time that we go to a very quick break, and then we will come back. We'll have some fun. We'll run you through the very famous crypto conversation hot take around. And we are back, or if you're watching this on YouTube, we've been here all along. But we're with Nick Neuman, who is the founder of Casa, all about helping Bitcoiners self-custody their Bitcoin. And Nick, I like to finish each podcast with just a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Sure, let's do it.
All right, so I'm just going to throw some quick questions at you, Nick. There's no right or wrong way to do this. Just give me some quick, snappy answers, hot take style. The first question, Nick, is where would you say you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I would say I'm a Bitcoin maximalist. I think that Bitcoin has won the battle to be the best form of money in the cryptocurrency world. And I think that the other chains will continue to exist. Just look at the history of the last 10 years of the industry, right? Like that's just, there will always continue to be people building on other chains and trying new things. And that's not a bad thing. But if you want the best form of money, you need to turn to Bitcoin. The other chains, I think, will really focus around like smart contracts and decentralized computation, that kind of thing, which today is, just not what Bitcoin is focused on. I actually think maybe eventually they're at higher layers in the Bitcoin network, we could start to see more of that happening. But yeah, I would say Bitcoin maximalist.
I like it. All right, Nick. Well, what would you say is your firmest conviction, a Bitcoin opinion?
Firmest conviction is that, I mean, it ties into Casa's business. It's that given the right tools and given the understanding of what it enables, people will turn to holding their own keys, and this will be a fundamental change in human behavior, where we will switch from legacy banking, where people trusted these large institutions to hold their money, to the new world of banking, where people are their own bank. They're using private key managers to actually secure their own funds, and they're really all of their digital assets that matter most to them.
Yep. All right. Well, Nick, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So if Bitcoin has been around now for 12, 13 years, if you look forward, what does Bitcoin look like in another 10 years time?
I love this quote because, and I actually literally an hour ago said this exact quote to some of our new employees. It's part of the onboarding presentation that I give. And if you look back at how far Bitcoin has come in the last 10 years, we've seen it go from this kind of obscure corner of the internet where people were passing around 10 Bitcoin like it was just free candy to today, where Bitcoin is regularly talked about and tracked on CNBC, on major media channels, publications. And it's a huge topic of global conversation, even to the point where we have a country that is using it as legal tender. So that's a huge leap from over a decade. And I really expect a decade from now, we will see, let's see, to make some like real hot take hard numbers here, more than 1 billion people will be using Bitcoin. We will have major, like at least 20, if not half the countries in the world using Bitcoin as a reserve currency. And Bitcoin will just be a part of everyday life rather than something that is this, like even today there's people that kind of think, oh, it's Bitcoin, it's kind of a joke, right? But no, I think that it will no longer be a question in anybody's mind whether Bitcoin is valuable.
I love it, Nick. All right. Well, one of the potential stumbling blocks, I suppose, that Bitcoin does have to overcome is the narrative, of course, that Bitcoin mining is bad for the environment and that proof of work is a net negative for the planet. So I suppose, I know these are big topics, not always easy to approach from a hot take perspective, but I suppose, what do you see happening with the Bitcoin mining industry going forward? And is Bitcoin mining a catalyst for the growth of renewable energy?
Yeah, so that's my hot take, is that Bitcoin mining will do more for growing usage and build out of renewable energy than anything else in our world, because it ties profit motive to renewables. Whereas before, we required government subsidies to encourage renewable build outs. People had to take this super long term view on payback of building out solar or wind farms. Um, Whereas with Bitcoin mining, you can actually stick a Bitcoin miner next to a wind farm. And instead of having to turn off your turbines when the grid doesn't need any energy, which is that happens like when you drive past wind farms and just see them not spinning, it's because they had to turn them off. They can keep them running all the time and redirect that energy to Bitcoin miners. And so Bitcoin mining actually will give the ability to better monetize these major infrastructure build outs of renewable energy systems, and will catalyze our move to a greener energy world. And I think a lot of people today like a lot of the mainstream media likes to write these hit pieces about Bitcoin using as much energy as Sweden or something like stupid like that, right? But um, that tune is starting to change. There's a few people who are starting to in the traditional media that are starting to write some articles that are evaluate or like investigating how Bitcoin can affect renewable energy. And I think that that narrative will change over the next few years. And I think that from an action standpoint, over the next 5 to 10 years, it will be the biggest catalyst of renewable energy shift.
I love it. I love it again. Thank you, Nick. All right, let's start to close this out. Finally, Nick, what is your favorite science fiction book, film, TV show, or universe?
This is a good question. I really enjoy the Wheel of Time series by Robert Jordan. This is a series about um, it, there's all the typical stuff from sci-fi or fantasy books with, magic and swords and, beasts and all this stuff. But at its core, it really goes into these themes of what happens when you are forced into being a leader and you actually weren't looking for that in the first place. And I think it brings up just some really interesting themes about human flaws and like what it means to be a leader. And so it's something that I've, as CEO, I think about a lot, and it's something. It's one of the reasons why I like that series so much. In addition to it just being really enjoyable.
And that's the one, Nick, that was made into a TV series on Amazon. That's the one, isn't it?
Yep.
Yeah, I
Yeah.
watched.
So they ran a first season on Amazon of it, and I thought it was good. They had to depart pretty dramatically from the books in some areas, but you just have to expect that when you go from a book to a TV show. But I think overall they did a good job with it.
Yeah, I enjoyed it. There you go, The Wheel of Time. All right.
Yep.
Well, thank you so much for coming on the show today, Nick. This has been an excellent discussion. Have really enjoyed talking to you. Nothing else to say really, except hand the metaphorical microphone back to your good self. Please tell the people where they can find you on Twitter or wherever else you like to hang out on the internet, and where they should go if they have been intrigued by your explanations of Casa, and potentially they've got some Bitcoin that they'd like to self-custody.
Yeah. So to find me, I'm on Twitter at @Neuman. So that's NNEUMAN. And then for Casa, our website is keys.casa, keys.casa. And our Twitter is at Casa Hodl. So that's CASAHODL. If you're interested in the product, go to our website, read a little bit. You can schedule a call with our team and get on a call with us and ask us any questions you want. We're happy to help. We really like to have a personal touch throughout all of our product. And so would love to talk to you and answer any questions you have about holding your own keys.
Awesome. Thank you very much, Nick. All the best, and bye for now.
Thanks, Andy.
All right, there you go. That was Nick from Casa. I enjoyed that. Nick is a smart guy. He was a good talker. So always a pleasure to talk to people like that. Yeah. How about you? You got your Bitcoin under control, listeners and watchers? I hope you do have your Bitcoin under control and some kind of self-custodial solution, if you know that is right for you. I mean, there's nothing wrong with holding some Bitcoin on an exchange if you know you don't trust yourself. I mean, there's different strokes for different folks. That's kind of the reality of it. You have to figure out what is the best solution for yourself going forward. But of course, you know, that is just such a, it's an important part of Bitcoin philosophy to self-custody your own Bitcoin, not your keys, not your coins, as people like to say. All right. Thank you very much, team. Thank you for listening. Don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using. But for now, that is today's show. We're out of here. Thanks, team. This was the Crypto Conversation for Brave New Coin. See ya.